When many people hear of an irrevocable life insurance trust, they first think that it is used for estate tax reduction to help offset taxes for federal, state, or death taxes. But ILITs can be used pretty much for a number of things, and they have a number of benefits. The first is what I discussed earlier, and that is estate tax reduction. You see, normally life insurance proceeds are included in your taxable estate if you own a policy at the time of your death. And if you're close to the federal estate tax deduction, then having regular life insurance proceeds can put you over that, and then you have to pay the death tax. But by having the ILIT own the policy, the proceeds are removed from your potentially taxable estate. So it can save you money from estate taxes. You can also use the ILIT to help pay some taxes that may be due, so you have that life insurance, which is non-probatable property, which can be used to pay taxes or debts of your property after you die. The second thing that ILIT can do for you is it can give you control over how and when the funds are distributed. So if you have a typical life insurance policy with beneficiaries, the insurance company is going to pay all the money out to the beneficiaries when they file the claim after death. But if it's in an ILIT, the distributions can be just like any other trust, where you dictate how the money is doled out, and you can set the rules and regulations of how this money will be used. For example, you can provide for your children over time. You can restrict the distributions to certain ages, or to protect the beneficiary of spending the money too quickly. You can protect the beneficiary from creditors with that money. So this gives you greater control from the grave, where you can protect the money that you are going to leave for your beneficiaries through this ILIT. The other thing that an ILIT can do for you is it can help liquidity for estate or trust settlement purposes and expenses. So say that you left a lot of property to your beneficiaries, but you didn't leave a lot of cash. These folks are cash poor, even though they have the property. How are they going to pay for the upkeep of the property? It might need to be fixed up. It might need to be sold. They may want to keep it in the family for a certain reason. But if you have this money in an ILIT, you can set the rules that the monies in the ILIT can be used for the upkeep, the maintenance, the expenses on any type of property that you may want to go and stay in your family down through the generations. So it will not force your successor trustee or the personal representative of your estate to liquidate stuff in order to pay expenses, maintenance, taxes, or anything else that might be up there. So in short, you can use an ILIT for estate tax savings. You can use an ILIT to cover and control distributions, and you can use an ILIT to help liquidity after you pass away, so that your beneficiaries do not have to liquidate stuff that you want to keep in order to pay expenses and taxes and all those other things. If you have any questions about an ILIT, you can always reach out to me. I am Guy Martino. Have yourself a good day.